Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Konevsky, Interim CEO and Chief Legal Officer at tZERO, to discuss blockchain's role in private markets and liquidity. It's great to have you with us. Welcome to Trade Talks.
Thank you. Delighted to be on.
The drawbacks of the private markets were once due to lack of inclusivity and liquidity. How has blockchain technology begun to change this?
Thank you. And it's a tremendously important question because private markets have been dislocated for some time, whether in terms of ability of investors to access investment opportunities and trade those investments in a continuous and automated and efficient manner, or ability of companies and issuers to tap into a broader investor base. Blockchain really introduces a tremendous ability for companies to access secondary liquidity in an efficient and compliant manner on regulated platforms such as tZERO ATS, as well as to ensure compliance with things that are important to private companies, like certain types of transfer restrictions or ownership limitations or other things, and achieve that through automated smart contract technology.
So how are digital securities revolutionizing the private market investment space?
Absolutely.
And
a critical element of digital securities is the ability to see a company's capital structure. Transparency is critical. We've seen this play out a lot with public companies where the holding structure, the ownership, the shareholdings are really opaque. And so the ability to see a company's capital structure on chain and to see how the ownership is distributed in a pseudonymized way, of course, that preserves investor confidentiality is a critical element. Number two, automating compliance. Again, a lot of the things, transfer restrictions, other things that take weeks and months to enforce through this kind of manual lawyer-driven process that takes time, costs money, and really deters people from participating in private securities can be automated. I think the last one I would highlight is settlement. It's critical. These types of private transactions, in part because of a lot of the paper chase that's involved with going through the process, take a long time to settle. A transaction on chain can happen instantaneously or in any event the same day. And that's a tremendous advantage versus how private markets have been operating and still do.
Right. So Alan, where are private companies turning to achieve secondary liquidity?
Well, I think you really have sort of, a few options. Either you don't think about your investors and you don't let them trade and you don't give them paths to secondary liquidity. You set up some kind of an environment where people can trade by appointment, which again takes a long time to identify buyers and sellers and to consummate the transactions. Or you really come to an alternative trading system such as tZERO ATS that provides continuous automated liquidity to securities of companies that are quoted on the ATS and that comply with the requirements, including having securities that are eligible to be freely transferable under federal securities laws, providing appropriate disclosure and other things, and then really giving access for investors through a brokerage account to access and trade these opportunities in a manner that's not dissimilar to how you would tackle public stocks.
Right. And so let's talk about that more, the role of tZERO in the ecosystem. And then Alan, also, what's your outlook? Do you think that the private market is going to continue along this digitization route?
Absolutely. So, tZERO has really developed a broad footprint on the regulatory and technology and commercial side in this ecosystem. Again, private security liquidity has been broken for some time, pre-blockchain. Blockchain and digital technology generally, and by the way, like being a secular believer in digitization of value and moving to a world where you have digitally native value, whether they're stocks or money or whatever it is, sitting in kind of a self-regulating environment, that's, coming from that perspective, blockchain in ways that we discussed allows to address the fundamental problem that exists, whether with blockchain or without, of fixing secondary liquidity for private investments. And tZERO comes into that in a number of respects. One is, and they're both B2B focused and B2C focused. One is we work with issuers to help them tokenize their cap tables and bring their securities for quotation and trading on tZERO ATS. So that's technology, and that's very B2B issuer focused. Number two, we operate a tZERO ATS, a broker dealer compliant trading platform where those securities are quoted and traded. We also have a retail broker dealer that subscribes to tZERO ATS alongside other non-affiliated broker dealers, and whose investors can have access to unique assets that trade on ATS. And beyond that, tZERO is looking to develop really a holistic, kind of cross-asset digital investor experience that allows folks to trade private securities, cryptocurrencies, public securities in a seamless user interface that really looks to this future of what internet did for data and voice, digital doing for value, with minimal intermediation, minimal friction, digitally native, self-regulating, inclusive marketplace. And I think the forecast really looks towards that because, again, you're looking at an ecosystem that has been broken for some time. You're looking at a number of private investors, including large institutional investors, expressing growing interest in private assets. And secondary liquidity, as important as it is for retail investors, is going to be doubly important for institutional investors, including in terms of kind of the cost of capital that these investments would have for their balance sheets and other things. And so I think the trend in growing secondary liquidity for private investments and unlocking that ecosystem, whether it's private companies, whether it's real estate projects, whether it's funds, whether it's other assets, NFTs and other things, and certain cryptocurrencies that should be treated as securities. You're looking really across the spectrum. And so I think that trend will continue. I think the trend of digital penetration in that will continue as well. Changing public markets, putting public markets in blockchain is a bigger project. We've talked about, and the industry has talked about the benefits of that, including some of the downsides of delayed settlement that we saw play out earlier this year with GameStop and others. But public markets kind of move at their own pace, although there's real momentum. In private markets, you can test and learn and develop with blockchain technology in a way that's more nimble and faster and quicker to market. And I see that penetration continuing, including in view of some of the very positive guidance that has come out of the SEC over the last 12 months or so around how broker dealers that operate ATSs can handle fully kind of digitally native securities, or failing that, securities that utilize blockchain in more limited fashion.
Right, but Alan, to your point, if you take a look at recent asset flow data sets, you're seeing that it really is going out from traditional equities and bonds and moving into alternative asset classes. And when you think about fintech overall, fintech brings the speed, legacy institutions bring the scale, so it's kind of easier to move that alternative landscape versus trying to go headfirst in and redo the equity and bond markets, if you will.
Yeah, absolutely. And I think there's a virtuous relationship between supply and demand here, right? Some folks, I'll give you an example. No one was walking around, I'm dating myself, no one was walking around in 1997 saying, gee, I wish I had a smartphone, right? But Apple puts out, the iPhone, and everyone wants a smartphone, and other manufacturers. And it's the same thing, but I think private securities and this kind of broad access and secondary liquidity, continuous automated secondary liquidity for private securities, where there is a bit of a catch-22 relationship between supply and demand, but on the balance, supply wins. And I think institutional interest, institutions as investors also bring with them supply, because those same institutions are sitting on a range of assets that can be unlocked and traded as well. And so, you're looking at a very kind of self-reinforcing virtuous cycle relationship.
All right, Alan, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.